Happy Thursday, folks. This is Lee Gaus coming at you again from the offices of International Futures Group and EFG Group here in Chicago. And it is Thursday, which means we're going to be taking a look at Numberology and what the LAWG 647 model tells us as we go into the critical weekly close tomorrow. Keeping in mind that the prices I'm talking about where the trends reverse happen on a Friday. So that's why we're going to be concentrating on Friday closes, and the closes that I mentioned are tomorrow closes. Now last week we talked a little bit about the gold market. We said the gold market was close to reversing its trend, and it did indeed reverse its trend. Unfortunately, it looks like gold used all its energy on the upside to turn the trend, and has very little, or has had very little, buying interest going into this week or during this week. We did put out a small buy recommendation very early in the week. Our stop loss was hit, taking a small loss. We've stood aside since then. We will look at the beginning of next week and see if there's something we may want to do. Gold reverses back to a downtrend if it closes at or below 1086 tomorrow. And as we came in here for taping, gold was trading at 1114. So while it isn't on the precipice of going lower, it is well within the range of seeing a 1086, or well within the possibility of seeing a 1086 tomorrow. So we're going to watch and see what gold does tomorrow, and we'll take a look at it the first of the week to see if there's anything we want to do. Now going into tomorrow, what commodities are on the verge or close to a trend change? We're going to start with December wheat. If December wheat closes tomorrow at or above 519 3/4, December wheat will go into an uptrend. It was last trading at, when we came in for taping, at the 522.5 level. If it fails to go into an uptrend this week, then the critical price next Friday will be 504 3/4. The Dees sugar is trading as we came in for taping at 1320. A close tomorrow at or above 1257 turns Dees sugar into an uptrend. Let's talk a little bit, or review a little bit again about cattle and feeder cattle. We talked about that at some length last week. December cattle remain in a downtrend. It takes a close tomorrow at or below 156.05 to reverse that trend. When it came in for taping, it was trading at the 128.92 level. So obviously we will not see a reversal in cattle tomorrow. And if my math serves me right, or memory serves me right, that's like another $8 break from what we talked about last week, which puts the drop in cattle from the time we got our reversal signal to the taping of this program at almost a $30 decline, and that's quite a hit. Now feeder cattle remain in a downtrend. We need a close tomorrow at or above 218.90 to reverse the trend. When we came in for taping, it was trading just over 175. So again, we will not see a reversal in the trend in feeder cattle tomorrow. And week to week, or Thursday to Thursday, we're looking at another $9 decline. Again, take a look at what we talked about last week, add another $9 to it, and you can see the type of move that cattle and feeder cattle have had. One other commodity I want to bring to your attention is the December corn. December corn can go into an uptrend tomorrow if it closes at or above 401 3/4. The reason I mention it is, it is not likely that corn is going to go into an uptrend tomorrow, but next week, the next Friday, a close at or above 381 1/4 will get the job done. Now, one thing to keep in mind, that doesn't necessarily mean that corn can't have a significant break, just like wheat may have a significant break, and both avoid going into an uptrend. I can't guarantee, nor I am suggesting it's a sure thing, that they will go into an uptrend. The one thing I do think is highly likely that I would be willing to stake a claim to is I think you could see an increase, a significant increase in volatility as those commodities approach or get close to those reversal levels. So keep all those prices in mind. If you have any questions, you can get a hold of us at lee@efggrp.com, or you can call us at 877-304-1369. You can read more about us and some of our past articles at www.ifgfutures.com. And always keep in mind, folks, that if you're going to trade commodities, options on commodities, or commodity spreads, they are risky. There is risk. Underline the word is. There is risk, and it is a risky proposition in trading futures. Understand the risk that you are taking when you assume a futures position of any kind. Hey, one day early, have a great weekend, and I hope you have a good Friday. This has been Lee Gaus at the offices of International Futures Group and EFG Group here in Chicago.